It's a sunny day in Kenya. Sky is looking blue. I'll enjoy the weather. Rain is coming soon and I'm not ready. Kukinyesha nitamiss kukuona. Ukivaa sundress with your shoes all laced up. Let your hair down a little cleavage, got your cakes up. Guys, turn it down. That was Sunny Day in Kenya by yours truly, and a perfect way to segue, welcoming back the team to episode 17 of the Money and Youth talk show, guys. And also, I don't know if you guys notice anything, but it's like we shifted spaces.
Your dreads are longer.
My dreads are longer. Wow. New jackets.
Oh, the jacket.
The jacket. It must be the jacket.
So, to our viewers, welcome to the Money and Youth talk show. This is a show where myself and my friends get to come together and more or less talk about the world of business, the world of finance, the world of creativity, because we are all in the creative industry, and see how these different things interject. The show is brought to you by Your Mentor, which is a knowledge-based platform that more or less provides young creative entrepreneurs with the resources that can help them to thrive within their respective spaces. So, guys, I would like you to introduce yourself in this new space. We don't know you. In case I don't know who you are, whoever is going to start.
You should now start. You have to start
with someone specific. Wait,
yeah.
I will start.
You're the host.
Sawa. Let me do
but
this.
Also, the host should be like you. And introducing one of the best.
Okay,
Yeah.
but
In the industry.
let me give proper introductions.
That's why you're very Trumpish.
To my left is a friend, fellow business partner. I'd say finance guru, although he wouldn't want you to quote me on that. Self-proclaimed finance guru by his friends, not by him.
So friends.
Yes.
baptized.
Proclaimed.
Yes.
That was hard to pronounce.
Poet, fashion designer, instrumentalist. The list goes on. His name is Collins Rotich. Please say hi to our viewers.
Hi viewers. Episode 17. This is year 4.
Yes, year 4, man.
Yeah, these days we do it monthly.
Yep.
So we used to do it once every 3 months, if I'm not wrong. Now we are on once a month. This is the second month for 2025. And I feel like it's looking good. I feel clearly the show is becoming better. Higher production quality.
We don't have sound effects yet. But soon we'll be able to do something, and then there's a poo.
You know? So even I think the other day I was looking at the first time we ever did a show outside of the house. Remember it was the Crib K.
Yep. Shout out to the Crib.
Shout out to the Crib by the
Shout out Anjiru.
Yes, please by the Crib K. It was really nice. And then I'm looking at the dynamics that were there then, vis-a-vis how we now transition to doing at Radio 254, and then now in the studio, and I'm like, you can just see it keeps getting better and better. So I'm always happy to be here, happy to be here with the team, the friends. I'm ready to provide value where we can. Ideally here I was just speaking from a bit of experience in the things we've done in the industry and how that relates to maybe an entrepreneur or a creative in this industry. And yeah, nothing but providing value. That's our objective.
Amazing. Oh, wow. And to my right is fashion designer, logistics expert, model. What else am I forgetting? Financial expert, also self-proclaimed by the people, the streets, not him. Don't quote me on this. Young Papa, a.k.a. Thomas Aquinas.
Thank you, Chai. Yeah, so, wow. That was a good introduction.
Thank you. I'm really trying. Maybe I'm going to do this with every episode moving forward. It feels good, Cindy.
It feels good.
Very well. Now you see.
You need to have our accolades on a list always.
I will. I'll actually have them on my notes.
Ready.
Should, because that was really nice. So, as Colin said, most of it, we are here to give our personal experiences and give valuable information information that goes a long way for young entrepreneurs, youth especially. We're here to pass our experiences, talk about how we try and progress in this business life with ways which you can also make money, just not being strictly within the normal or traditional business processes, but other processes. And today's show is going to be very, very interesting because I'm also going to
Don't tell.
Okay, I'm sorry.
You're just supposed to introduce yourself. Say thank you. Yeah, got right into the topic.
Yeah. So let me leave it up to you to do the rest.
Censored him as
Hey, I just mute his mic. Now we have the tools, guys. I have the tools to do it. So, guys, this episode was brought to you by True Denim Collection. For those of you who don't know, if this is your first episode tuning in, the three of us are co-founders of True Denim Collection. You see these beautiful, beautiful, beautiful jackets over here. These jackets are bespoke, which means if you want to get yourself a piece, we'll have our amazing designer come to you, get your measurements. You can exchange ideas with him. And once that's done, we get to make for you a piece that is specifically for you. Something premium, something personal, something different. So this episode, as all the other episodes before, is brought to you by True Denim Collection. If you want to get yourself a piece, please be sure to check out the website at www.truedenimcollection.com or any of our socials at True Denim Collection. We'll be sure to have you sorted out. This episode is also brought to you by the Sharp Entrepreneur. So, if you're curious about how a lot of the thought process of starting your mentor and helping young creatives get to start off from somewhere, it's all within this workbook. It's a workbook that one of the team members at your member got to write, and it can help anyone who wants to start a creative entrepreneur venture and doesn't know where or how to start. So if you want to get yourself a copy, be sure to DM or direct message any of the Your Mentor handles, which will be available anywhere down there once you're watching. So yeah, now that we're done with all the particulars and we're caught up, Happy New Year, Karibuni.
Happy New
Happy
Year.
Valentine's.
Happy Valentine's.
By the way, Happy Valentine's to also everyone outside there.
Yes.
Let's go to our topic of the day. So this topic is kind of, there's going to be a main topic and a subtopic in that. The main topic is going to be a series that we are going to dive into for like the next 4 or 5 episodes. I say series because we're going to be exploring different financial instruments, and we chose to start with an amazing one, which is SACCOs. So our topic of the day is how SACCOs empower young entrepreneurs and creatives in Kenya. Let me repeat that. The running topic for the different series is going to be unlocking financial freedom, with this episodes being how SACCOs empower young entrepreneurs and creatives in Kenya. So basically, the gang and myself, we're going to discuss SACCOs in the next hour, get to understand them for someone who doesn't know what they are, get to scrutinize them, get to just observe them from an eagle's eyes perspective. Hiya. So before we begin, I would like to give all of us a bit of history on the world of SACCOs. So please allow me to go through my notes. Let's go back in time now. Hiya. So, number one, SACCOs, the term SACCO isn't what is used to describe the financial instrument around the world. That's predominantly used in most African countries. The term that I learned when I was researching this was credit union. So it says that a credit union is a member-owned non-profit cooperative financial institution. So in several African countries, credit unions are commonly referred to as SACCOs, which is short for Savings and Credit Cooperatives. The idea of cooperative savings and lending was inspired by the broader cooperative movement that started in Germany in the 19th century. So basically what that means is, if you look at original, number one, back in the day, 19th century Germany, the person who coined the idea was a man by the name Friedrich Wilhelm Reifensheim. I would like to apologize to our German listeners if I butcher. Reifenstein. He was a German mayor who founded the first rural credit cooperative to help farmers access affordable loans. So it was mainly built for farmers. This was around agrarian revolution time, so kind of makes sense, yeah. So his model was of community-based, member-owned financial institutions spread across Europe, forming the basis of modern SACCOs. So now let's try and see the history of SACCOs in Africa. The SACCO model was introduced in Africa during the colonial period, particularly by missionaries and development organizations. So in the 1950s, countries like Ghana, Uganda, and Kenya began to establish cooperative credit unions to serve small-scale farmers and traders. In Kenya, sasa say let's bottle it down. We've come from original, which is what is in Germany, to the continent, to now Kenya. In 1964, the country officially recognized cooperatives and SACCOs as part of its National Economic Development Plan. The first SACCO, number 1, in Kenya was established in Marira, Murang'a County. Guys, let's give a shout out to the Murang'a guys. The guys were ahead of the curve in the year 1964 by the Catholic Church, specifically through Father Joachim Getonga. This is considered as the starting point of Kenya's SACCO movement. So now, around when we get independence.
1964.
Yeah, independence.
Okay, makes sense. Okay.
So, the same year, 1964, Kenya officially recognized cooperatives and SACCOs as part of its National Economic Development Plan. So, at least now we know that as soon as Kenya was birthed as a country, SACCOs were used as some form of financial instrument here. In the 1970s and the 1980s, there was rapid growth in the industry, particularly among teachers, farmers, and government employees, which is interesting because around this time, I'd say, is when the economy was now starting to do really well. Like most of us are parents, this is when they were either, I'd say, in their teenage years or young adulthood years. They were much younger. So this is when the economy was more or less building itself. So these different industries were looking for places to, I'm guessing, either invest or grow their money. The government established policies to support cooperatives, leading to the formation of large sector-based SACCOs, e.g., Mwalimu National SACCO for teachers. So this was the first big one, like corporate scale SACCO. The others were more or less like community-based. Currently, it's called Mwalimu National SACCO, but back then it was just Mwalimu SACCO. By 1990, SACCOs were a major force in Kenya's economy, with thousands of members and billions of shillings in savings and loans. But despite their success, there always has to be a despite. The 1990s saw governance issues, mismanagement, and fraud in some SACCOs, which we'll come and discuss in detail how it's perpetuated to now. This forced the government to introduce stricter regulations to ensure financial stability and protect members' savings. So fast forward a bit to 2008, when the government finally passed the SACCO Societies Act, leading to the creation of the SACCO Societies Regulatory Authority, or SASRA, in the year 2010. This is basically a regulatory organization that's more or less charged with licensing, deposit taking SACCO societies. More or less, the world of finance using SACCOs, these are the guys who regulate it. Only you, like the watchdog of sorts. So, wrapping up, SACCOs modernized the operations, offering ATM service, mobile banking, and digital lending platforms. This makes sense because now they're regulated. So you can more or less get to a scale where you can operate with other regulated instruments like banks and such. So, finally, Kenya now has over 5,000 registered SACCOs with millions of members across different sectors, some of who are with us right now. And they continue to contribute significantly to the economy, providing affordable credit for small businesses, farmers, and low-income earners. So I hope that gives us a broad understanding of how SACCOs came to be as we currently understand them today, both for us and the listeners. So this takes us to our first speaking point of the day. And now we're going to try to understand SACCOs. And we hear a lot about SACCOs all the time, but I can imagine for someone who doesn't know what a SACCO is, maybe for them they just know a bank as the only instrument for managing cash or sorts. What is the difference between a SACCO and a traditional bank? In layman terms, how would you guys explain it? The floor is open to, or rather, let me start with Collins and then I'll go to Thomas.
I think before even like comparing it to a bank, it's a bit important to understand sorry guys,
It's okay. It's okay.
like a cold.
It's okay.
But I think even before like getting to compare it with a bank, I think it's much more important to understand the nature of what.
Yeah. How does it work? I think we should start with that.
And then also, so SACCOs, if you look at the definition, or like if you break down the word SACCO, it's a savings and credit cooperative. So there's three key terms there: savings, credit, and cooperative. So even before we go into SACCO, you should ask yourself what is a cooperative. And if you do your research, you'll discover that even the word cooperate, it means that let's work together towards a common goal. So a cooperative is basically it's independent associations between individuals. Association, I was used that as a very specific word. It's independent associations between individuals working towards a specific, maybe it could be an economic goal, it could be a social goal, or it could be even a religious goal, or it's just basically working towards a specific goal. And how do you do this? Through entities whereby you are both the owner and the user. So they own these entities and they run them. So ideally, let me give you an example. For getting SACCOs, which are savings and credit cooperatives, there's something like housing cooperatives. So what do housing cooperatives do? They take money from members, they buy land, they build houses, then these houses are for the members. You get? So you're both the owner and the user. That's the whole cooperative element. There's another cooperative in it, consumers cooperative, I think, if I'm not wrong. I could be misquoted wrongly. But I think it's consumers cooperative. What they do is they want to protect their members from high prices. So maybe they buy directly from suppliers or wholesalers and then sell it to their members at an affordable price. There's different types of cooperatives. A SACCO is a savings and credit cooperative. Meaning it has three main things. It has savings, it has credit, and then it's member owned. It's cooperative. So this means that members pull in money as savings. Then these savings acts as collateral, so they can borrow it as credit. And then who manages these organizations? Members. It's member owned. I think that's actually, when you go into this conversation, realize that the officials who manage SACCOs are usually elected by members. You get, because it's a corporation. It's nikitu yetu. You get, it's very specific. That's why you find that members share a common bond. You might find that they work in the same organization. For example, Stima SACCO, Safaricom SACCO, Mwalimu SACCO, unajua, Kenya Police SACCO. So these people usually share a common bond. However, as time has gone by, the public is also able to enter different types of SACCOs. You can be a member of Imarisha SACCO. You could be a member of Stima SACCO. You could be a member of
police.
Any type of SACCO. Even police SACCO is open to the public. So just to answer your question, what SACCOs are, they're basically people coming together, putting money together so that they could loan it between each other, and then they earn from that, because they're the ones who, like, if interest is paid to the SACCO, members get, at the end of the year, they get interest rebates. So like if you've saved, because remember your saving is what is collateral. If you save a certain amount, you earn profit from that cash, because they rent it out to someone else. Now it's back. So if you save a certain amount, they pay you a certain amount for using your money to lend to another person. So it's basically about savings and credit. That's like the whole summary around SACCOs.
Okay, I like that. That you've actually answered something that I wanted to segue to, but I think, Tommy, you can kind of expound on it, which is the aspect of member ownership. And what is that? What is meant by member ownership?
Okay, from member ownership, what Collins said, or what is meant is, in order to join the SACCO, there's a fee. There's normally a fee that you're supposed to pay, the membership fee. So that membership fee gains you access into getting those privileges like being able to save within the SACCO and get loans and other things. But for that, you'll also be paying a monthly fee.
No, it's a monthly contribution.
Monthly contribution.
Yeah. Not the contribution. So if you join as a member and it's member owned, see, a SACCO needs money to run operations. So they require you as a member to contribute money at the end of every month. It's very fluid. But imagine this: imagine we're 1 million members. Each one of us gives a K. That's 1 million times 1,000. That's 1 billion every month. I get. A SACCO can take this money, they lend it out to other members because guys have emergencies. So SACCOs provide you those options. There's emergency loans, there's different types of loan products. This 1B is now rented out to members. I don't use the word rent so that people see the difference between, to understand what a loan is, basically borrowing. So they give it out to members, then members pay interest, and then now these members earn from that money. So it's basically, it's like you're owning the organization that you're giving people loans on, ideally.
It's like the share capital.
So there's two different types. When you join a SACCO, there's two different types of contributions. So remember, you are a shareholder, but you can also access credit. So when you join a SACCO, they give you like 2 different accounts. 3, because there's one you can use for current transaction. But let's focus on the primary ones that guys know. You can put your money in savings, or you can put your money in shares. Savings, you cannot withdraw, you can only borrow against it. So if I've saved 1 million, I can borrow against what I've saved. Basically, your savings are collateral. You know, when you go to a bank, they need something to secure this loan. Your savings secure this loan. So it's limited to how much you've saved. If you've saved 100K, you can access up to 100K if you're self-guaranteeing. If you're guaranteeing, if you're getting other people to guarantee you, each one of them have to have the amount of the loan that you're taking. So when they tell you can borrow up to 4 times, it means your 4 guarantors have to have that money at the bare minimum to be able to need. And then now for the share side, this is now money that you can't never get back. You can only sell it as shares because it's basically buying a percentage of a company. It's like owning Safaricom shares. So if you have 40,000 in the SACCO as a share, that money you can't get back. You only sell it as a share to someone else because it's a share. It's an ownership. So if you understand, the saving side, they use it for collateral, so they lend it out to members. The share side, they use it for company operations. You get how they gonna pay employees? How will the SACCO run?
Exactly.
You have to make money somehow.
You get like a business needs capital to operate.
Okay.
I get. So the capital maintains ideally it's used to maintain the SACCOs for it to survive. They can even do investments. Because like SACCOs, I'm sure we'll get to that at some point. But ideally, SACCOs make money in different types of ways. Ideally, with this share capital, they can make business decisions. So the savings is collateral for debt. The shares is money to run the business.
Okay. Now, considering now we have like a basic understanding of what SACCOs are and what the different things that they offer, I'd say consumers. For me, your aspect, your member ownership, that's for me what stood out really, comparing to other financial tools that we'll see when we explore them in the future. So now I'd like us to explore an aspect that I really wanted us to kind of look at. I'd say even the main thing is seeing how SACCOs can help young entrepreneurs and creatives, essentially, like people in our position. So my first question that I would ask is, and I'd like to throw this to you, Thomas. If I'm a young entrepreneur, why should I consider a SACCO instead of just joining a traditional bank?
Well, SACCOs at first, basically, it's a saving platform, and not only that, it's a platform where you can have good credit and get credited your given loans. In SACCOs, the loans that are provided have a very lower interest than banks and other traditional systems that normally give out loans. So it's advisable to join in a place where you can not only grow your cash as a young person, because with time, even joining it's a very affordable fee to join the SACCO. I joined in Marisha recently and I paid $650 to join. And it gives you different classes of how you can save. So there's a class A and class B. So for me, as a young person who I'm still earning cash monthly, but I don't have a fixed like payment in terms of being in a salary, income.
Mshahara ile ya
Inakuja
every
ni-
month.
ndio inakuja this week next week.
Hatuna hiyo. So I chose class B because class B is more affordable for such a person. And the lady who introduced me, who I met in the communication within the SACCO place, the customer care support, was very, very open to explaining.
Shout out to Imarisha's
Shout out.
customer
Shout
care
out to
support.
Imarisha.
Which by the way, shout out to these guys. They really
Just
shout out to these guys.
Sponsor this guy.
Yeah,
Sponsor this
you
guy.
guys came through in
Shout out
explaining.
Imarisha.
And the more open I was to the idea of, as a young person, she told me, as a young person, we do get a lot of money. We do get these small loose change. They do add up. In general, she told me, if you're able to acquire it and save it and put it in a place where it earns you interest also, it's not just saving that's staying there. It earns you interest a long while, and at the same time you can use it to start either get more money from it, get a loan from it and start a business, or pay off loans or something that you might have as a young person in the future. And she also opened to me that SACCOs were for young people. The only reason why young people tend to avoid SACCOs is because of that time in which you're saving to be able to get something from it. She told me Imarisha, she explained to me, it was about, you save for around, is it 6 months, 6 to 1 year?
Then you access credit.
Then you can access the credit in it. And most people shy off to that because of the inconsistency. Yes. But she explained to me the value in which you'd end up getting after that 6 months, and how being in a SACCO, there's a lot of financial understanding, financial literacy that you get when you involve yourself directly every single time. Even in terms of, after that 6 months, if you bring up the idea of bring up business, they'd be more open to understanding more about the business, giving you their research advice, yes, and consultancy about that before you approach that way. So
That's actually very valuable information. I'd even forgotten about that. So maybe just to answer your question, why should a young entrepreneur think about joining a SACCO? I think from a purely finance perspective, whenever you're doing business, there's something known as cost of capital. Cost of capital is how much does it cost you to get money to do business, because capital is money for business. So if assuming I can take a loan at 10% vis-a-vis taking a loan at 30%, if I'm making a business decision, it makes sense to get the cheaper loan. You get. So the thing about SACCOs, they provide very, very affordable loans. Ideally, it's for the Marisha, it's even 12% per annum. Per annum means per year. If you divide 12% divided by 12, it means it's 1% per month. Mshwari is 8%. You get, meaning that if you have an Mshwari loan, you're paying 8% for that 30 days. Me, I'm paying 1% for that 30 days. So it's cheaper for a business owner. And businesses have needs whereby you need to access credit. You can't be a business if you don't have a capital structure. A capital structure is, where can I get money as debt if I need financing, or even if I need like equity? That's one of the benefits. Get access to loans. And also it builds that line of credit. Because when you start a business, most times you don't have banks. It's very hard for banks to give you a bank loan. But with a SACCO in your business owner, contribute slowly. Whatever you have saved, you can borrow against. So imagine, and then also what Thomas said, it also allows you to have like a sort of a pool of funds somewhere. It's like because you can access that cash very quickly. It can act like a sort of an emergency type of fund. When you have a business need that's pressing, you can just go to your SACCO, take that loan one time, sort it out. The other benefit is what he was talking about. Since SACCOs are member owned, remember it's savings and credit. So we talk about it allows you to learn how to save. It allows you to access cheap loans, cooperative. It provides a community. You get, like Stima SACCO gives you mentorship not even mentorship. They have like webinars which teach you on financial literacy. Thomas has just said, if you have a business, they're able to give you advice on how to make it feasible. They're willing to listen. It's owned by the members. They have the members at heart whenever they're making those decisions. So even for businesses, you can get opportunities like those ones. They can listen to you and finance your business and even advise you on industry standard of how to run your business.
On that note, have to pay some bills. This episode was brought to you by True Denim Collection. True Denim Collection is a bespoke fashion company. TDC. If you want to get yourself some amazing True TDC or denim pieces, be sure to go to www.truedenimcollection.com. Place your order there. The episode is also brought to you by The Sharp Entrepreneur, which is the guidebook we use to more or less guide most of the discussions that we have on our platform right here. If you want a copy, be sure to hit a direct message on any of our different Your Mentor platforms, and I'll personally be sure to have you sorted out. So, guys, let's go on. Now, I'd like for us to kind of compare SACCOs to the other financing options that are available to us. And so that we don't, because I know just the comparison alone can be an episode by itself, let's try and limit it to the ones that we know people have access to, things like traditional bank loans, traditional bank loans, mobile lending apps. So for me, something that I'd like to ask is, how do SACCO loans compare to traditional bank loans when it comes to flexibility and repayment terms? Because you mentioned the interest rate, which is something that when you actually look into it, SACCOs are very lenient when it comes to the interest rate of the loans that they give you compared to traditional banks. And you've mentioned like Mshwari, which is 8%, for example. So this one I'd like to pose to you, Kolo. How do you think the comparison is between SACCOs and traditional banks in terms of, say, getting a loan for 50K?
Ideally, like the first that you mentioned, a bank loan, you'll find that they give you something like 19%, sometimes even above 20%. Maybe in a good economy, 15 uko. A SACCO will give you 12 to around 14. Number two, SACCOs have very flexible repayment terms. By that I mean, a SACCO, you might find that I know Imarisha gives you up to 24 months. Stima gives you up to 72 months. Can you imagine paying 50K over 72 months? It's like a G a month. You get, like, for example, Mshwari, take 50K. It's due at the end in 30 days. SACCO, take 50K. It's due in 24 months.
Yeah, 2 years. So
you get, it's like you're paying 2,500 per month. You get, that reduces financial distress. Because if you have a lot of high payables at the end of the month, you can't be, there's no financial cushion for you to survive on. So SACCOs give you that flexibility. Another benefit that SACCO has over a bank is what Tommy was saying. It's member owned. You can be able to even negotiate for better terms. Hey, Cheki, I'm struggling, but I'm your member. I need help. I can't pay this thing like this. Can we renegotiate how we're going to pay this? You get, like, they're listening. It's like, it's member owned. Like, that's one of the most important thing you need to understand. Like, your SACCO is your people. It's like a social group.
It's not an institution.
It's an institution. It's a financial institution, but the nature of it has this thing. There's, in finance, it's called the cooperative principle. Cooperative principle. We cooperate to make these things happen. So just to answer your questions, it's cheaper, flexible repayment terms, and it's easy to negotiate when things go bad. The only limitations that they have is, a SACCO, you're only limited to what you've saved.
Oh, okay.
So, for example, if you're a big business and you want 400 million, a bank is a better option. Because a bank can't give you that kind of cash. Like, banks give much bigger volumes. Because a SACCO is linked to how much you've saved. Like, for example, even the collateral thing whereby said you can get up to 4 times what you've saved. It means that you need 4 people to guarantee you. And those 4 people, whatever they've saved, has to add up to your loan amount. So if these guys don't have that cash, if your network doesn't have that cash, you can't get that loan. Okay. So there's that limitation, But bank, you can unlimited cash flow. So if you're a big person, it makes sense. But if you're starting off from zero, like, let's say, umetoka kampo na you don't have nothing, join a SACCO, save. Ukifika 100K like this, you can literally borrow 100K out of thin air. Okay. Some SACCOs even give within 24 hours. Others give within a week. A bank will take like a whole month.
I guess on the flip side, now I'm thinking most young people, they don't even have the credit to access loans from banks. So
Even
for
from
them,
Mshwari.
for them, even I wanted to ask, in the world we live in, mobile lending apps are the more accessible source of credit. Like for me, the first time I was able to access credit was through my KCB M-Pesa. That's even prior to like going to try and get a loan from a bank. So what about the comparison between SACCOs
And mobile lending.
Yeah, maybe I don't know. Whoever.
Okay, fine.
Let me
No, please take over.
yeah, take over. You.
Because I tell you. So for mobile lending, I think the biggest benefit, and it's the biggest thing that pushes mobile lending, is the fact that, number one, you can just get it on your phone. I think
Accessibility.
that one factor changed the game. Like even for banks, I'm sure that's why KCB Bank waliingia KCB M-Pesa. That's why NCBA waleta Mshwari na Fuliza. Unajua Absa Bank wakaleta Timiza. It's because it's so much easier to just go to your phone, take a loan right now for an emergency that happen right now. So it prides on the impulse spending habit. SACCOs were built to help those predatory lending habits, because someone will take advantage of you. You know, my subscription, take this loan.
Because you even you're not taking it against any leverage whatsoever. You'll just be in debt.
Exactly. Now you get, so it's so easy to get and it's so close to you. Like you don't need to go to a branch. So it has benefits. Like it'll come in handy. Let's say you're a business person and maybe you need working capital now. But you get, the purpose of that loan is to pay working capital. Si ati kwa club balance aingiani ya kuna mzinga.
But I think if you're spending SACCO money to buy mzingas,
That's a wrong spend.
you're not money and you think really.
That is the
Bad
wrong
decisions.
Yeah.
But ideally, so I think that's like the biggest difference. Like, and then also, see, we've said upper bank loans are let's even use 20%. But that's 20% per year. Divide 20 by 12. So it's around almost two. It's around 2, 1 point something. SACCO ni 1 point. SACCO ni 1. So even the difference between a SACCO and a bank loan, it's very marginal. It makes sense if you have big banks.
Okay.
Compare that na 8%. So SACCO ni 1%, bank ni 1 point something.
Na 8%.
Mshwari ni 8 to 9%.
So they really prey on that.
It's so expensive.
It's a very predatory.
You understand, 8%, if you do that, if let's say you don't pay it for a whole year, you'll pay 8 times 12. You get, which is 96% on your money. It's crazy. Me, if I was an investor, I'd put my money in an institution that gives me 96% returns. Hey, that's mad. So they're so expensive, but they give it to you in small bits. You don't feel, I'm just paying a 4-sock. A 4-sock on a loan of 3,900 doesn't make sense. Let's put it in perspective. 4-sock on 3,900. Let's do times 10. It's like you borrow 39k, you pay 4k. It's not bad. Borrow 390k, you pay 40k. Aye, bro. Borrow 3.9m, unalipa sijui 400,000.
Okay.
You get. And mind you, ni per month. So times a year ni 400 times 12. That makes sense. It's like, mobile lending is too expensive.
We'll touch more on mobile lending. I like the fact that you've kind of pointed to the fact that there's a correlation between mobile lending apps and banks. Because personally, you see how you're mentioning Mshwari is for this, KCB M-Pesa is for this. For me, it kind of shows me that these guys are in business regardless. And
it's just a product.
Exactly.
Like a bank will sell you a normal bank loan, but they can sell you a mobile loan. Even of late, SACCOs also have that mobile loan option because it's a good product.
Okay.
Like if you're a sound business person,
they make money from it
and you understand business. A SACCO, we can give you a loan at 1%. It will take you coming to our branches, filling up a couple of forms, telling us all of these things. However, if you need money, no, we have this product, but it's instead of 1% per month, it pay 7% per month. So Mshwari ni 8, SACCO it pay at 7 or 6. It's still cheaper, but nonetheless, the fundamental issue is the product itself.
Okay.
The mobile lending was for financial inclusion, for guys who don't have access to financing, which is good. Like the overall vision of it is good. However, if you don't have financial literacy to understand these things, they can really take advantage of you. Hence the case of predatory are lending.
Okay.
And that's what SACCOs are trying to fight as well. They're like, okay, fine. Even cooperatives in general, like for example, the consumer cooperative, they're trying to fight expensive products. So they rather buy from the wholesalers. Let's shield our members from expensive products. So same thing as SACCO. Let's shield our member from expensive credit.
Okay. So, guys, up to this point, we've kind of been talking about the good praises as SACCOs, and for good reason. They are a good financial instrument compared to the others. If you ask me, if we compare them to the others that we'll explore in the future episodes, there is a lot that it offers someone who is starting from nothing, which I'd say a lot of young people in this country are coming from, whether you're a young creative or just a young entrepreneur trying to start something. So despite that, much like a lot of other, or rather all other financial instruments, it has its own challenges now, its own like shortcomings. The first one, rather the biggest complaint that I came across in my research prior to this episode, is the issue of withdrawing money from a SACCO. Now this one, Thomas, I want you to kind of speak on this.
That one is,
Cut that out.
that one, cut that out. That one for itself, as it speaks for itself. When you join the SACCO, and this is something that I think even them, the customer care service normally gives you, they make you understand that joining a SACCO, you're joining to save money in the SACCO. So you'll be putting money in the SACCO, but you won't be removing money. The issues of not having to withdraw, the reason why they do that is so that it pushes the individual to get into a certain amount of credit, so that you can be able to borrow either against, because most of the times you'd find out that when people join SACCOs, you're joining SACCOs as an individual, so you don't have guarantees, or you don't have people who you can
if I want to get some cash, I can't put you as
because I'm not in the SACCO.
Okay.
So they issued that method of not allowing people to withdraw, so that the people are able to build up on their credit and have a good scores, so that you can be able to take a loan from it. Now the restrictions aren't for bad. What made me understand, it's not for showing that even if you get into, let's say, hundreds of thousands, because there's a certain amount of cash in which you can be able to withdraw after joining and after saving up to that amount, but it'll take a longer time to get it back, and then it's not necessarily as effective as you taking a loan that's 3 times or 2 times from the same.
But you still get
cash.
interest on
Yes.
once you've taken
Yes.
Okay, so no, let me just be a bit clear. That's withdrawing the cash that you've put in.
Saved, yes. So even at the beginning, as I've said, at the beginning, there's normally the membership fee, and then there's money that you put in monthly. The contribution. Now the contribution fee, that's the money that you can't be able, even the membership fee, you can't be able to withdraw it. Yeah.
The membership is a charge, so that's service charge done.
So the contribution fee doesn't go into my savings fee.
It's like joining a club. It's like when guys join clubs, you join, then now you become a member of the sports club.
Okay. So
I think maybe just to clarify a bit more on the withdrawables. Remember how we talked about when you put your money in a SACCO, you can put it in either shares or deposits. So these two products are actually very fundamental in understanding. So remember, your deposits are collateral for your loan. Your shares are investment in the business of the SACCO. So shares, like even NSC, the only way you can sell shares in Nairobi Stock Exchange market is if you sell shares to someone else. That's why you go to the market. Nikama market. The savings are what you borrow against. So like how you go to a bank, give them like a title deed in your savings. So you can never access your savings unless you borrow against it. You get, it's collateral. It's not money, it's collateral. I think that people just get that in their head. Kwanza, any money you put in the SACCO is collateral. It's collateral. That's why you need to understand SACCOs only for credit primarily. If you use it as an investment, yes, it can make sense. In the share side, yes, and even in the deposit, because you earn interest. However, you're not using the product well. Remember, SACCOs are for the owners and the users of the product. So, meaning that if this is collateral, you can never withdraw it until you exit the SACCO.
Okay.
So, let's say I'm exiting today. They'll give me back all of my deposits. I'll never be able to get back my shares. My shares I have to sell to another member. So that's the time you're like, yo, Kolo, are you trying to buy shares? How much do you have? I have 40k. Hey bro, mina pay 31,000. You get, because it's shares. You can't do it. But if you don't sell them, you still earn dividends. Remind you, remember, this is cash in an asset that is a share in the SACCO. So ideally, this one you always until the day you sell it, bado kuna dividends you'll be earning on it. Mind you, I don't think we even talked about it. Like savings earn you around 10%. If like Marisha last year they paid 10.5% on savings, deposit they paid 14%. Stima SACCO is around the same, 10 point something, 14%. Other SACCOs might find the share side is even bigger. Like a company like university give you up to 20%. But unapata, this side ingine unapata 10% on interest. So you can never get that cash back. The first thing issue, liquidity issues. That's the first thing.
Now, another one, and this is something very. If you follow like finance news in the country, you know a bit about this. There's something called Cusco scandal. Now, we have props. We don't want to shoot shots at Cusco farm, but
we are not shooting shots.
If you don't know what Cusco is,
This is Cusco.
this is Cusco.
And they release it.
Is that a camera?
Let me just take the camera.
We have props by the way. We came prepared.
Can someone like just give like a brief overview of what Cusco is? Because it will explain why mismanagement and fraud is a big problem with just essentially SACCOs. So, Thomas. Collins.
Yeah.
This is Collins' jacket. He's a Cusco member.
That's Cusco. Takwa cancelled.
So yeah, just to speak on the aspect of mismanagement and fraud, I think this is a very relevant example to give.
Did you want me to speak on Cusco, like what it is?
Maybe let me give
an overview. Yes,
an overview of what Cusco, from what I understand, because guys, I'm not a finance guru. I'm also learning like you guys. But from what I understand, Cusco is like an umbrella union of all the different SACCOs that are within the country. They function as a form of advisory board for the different SACCOs to where is the best place to put the investments, the best way to run the SACCO itself. I don't know. I think that's a...
Beautifully put. Beautifully put.
That's well done.
Thank you. So I guess maybe touch a bit on...
okay, just on that definition. You said it's a union. So Cusco in full is Kenya Union. Is it Kenya Union something SACCO, whatever. So ideally it's a union for SACCOs. And just like any organization, a union is meant to protect the people. Like doctors work strike, union. Teachers union. Nurses union. So a union is meant to ideally its intention is to protect the interests of the members. So SACCOs are financial institutions which exist as entities. But they have members. So all of them so a union protects all of these SACCOs. More or less they represent the interests of the SACCOs. Union is about representing the interests. That's why doctors of strike when are represented by the union. So as you said, how they do that is they make sure that the management, the board of directors are able to run the SACCOs well. So they provide, it's like management consultants. They'll train you on best practices. They'll train you on all of these things that you do. Like you'll find that boards usually go for like monthly or maybe even every period they go for like a conference to learn on how better to run your SACCOs. They'll keep you updated on current affairs in financial policies, regulations from SASRA. Ideally, it's that kind of thing. Remember, and this is important because remember SACCOs are member owned, and the board or like the people who SACCO members elect the officials to run them. They're not financial experts.
So there's there's like internal bureaucracies that ensure board members. It's not based on merit.
It is based on election. It's of course it's based on merit, because for you to even reach a point where you can run, it's like politicians. Before you run, you need ground to cover. So yes, there's politics as well, but however, it's the members who choose their leaders.
Like for example, if say the board for TDC SACCO is 1, 2, 3 plus 2 other people, and me and you are part of the board, and he'd like to become elected. It's much easier for him to become elected because we are part of the board. How
people vote. So maybe what you could do is maybe we buy votes. You get
okay.
Ideally, members vote. You own the. Remember, a SACCO or any cooperative, it's run and owned by the members. So if it's 15 million members,
15 million people
of course
vote.
Not everyone goes to vote, because like me, I've never voted, to be honest. But like there's like special.
There's a framework for it.
There's a framework for this thing.
Okay.
So meaning that the people who end up running SACCOs are not necessarily experts in managing money. They're just like managers. They're like CEOs. It's like a CEO, a finance manager, marketing manager, and all that. I get. So, and now Cusco was now meant to now help these both be managed and be better. So guiding the decision. Though I think for this scandal, I haven't done enough research about it, but I think what had happened is that I think Cusco had also started taking money from members to invest for them. You know, advising. If I give you financial advice and I tell you give me your money to invest,
those are different things.
Ukisikia msa forex akwambia bro nipe nikutrade nipe account yako.
That was like the SACCO equivalent of it.
So bro nipe account yako. But I don't know. I don't want to misquote anything. You can do better research.
Cusco, guys, you need to do better. But so far so good. But I guess climb to Choma eventually.
You happen.
Give them.
I think
what SACCOs with Choma. As you see that problem for mismanagement, it will always happen because of the nature of how SACCOs operate. It's the members who elect their people who run them. You get, and they're the ones who do oversight as well. Unajua, it's hard for a private entity to do certain things because of the regulations. But this is you get the term, as in you get like nikasi watatu tutoa hapa tuamuita tuna loan against each other hadi grow. So at some point there's personal interest. It has an element of human error. Sorry to interrupt.
No, but you're right. In terms of even the other SACCOs, because we had a discussion earlier on, asking if there are other SACCOs that have failed, and it goes back to the same thing: membership. I mean, management, mismanagement, and fraud, leadership.
They're not investment experts. So wakiamua, kuna deal ya land hapa maze. You get like a normal like an investment bank has people who go to school for like 4 years. Then before to hire you need like experience for like 4 years. Alafu ukipewa hii kazi kabla upewe a job to make decisions for 4 years ama 10 years. So unaona 4 plus 4 plus 10 uni jamaa amekwenda 20 years ana deal with your money. Akianalyze stocks anaweza akakwambia the volatility ratio. You know, as opposed to someone who's like, hey yo bro, kuna deal imetokea huko. So I guess the biggest issue for SACCO for mismanagement and fraud is that like it's the people who own it are also running it.
Okay.
To some degree.
I see we are nearing the hour mark, and we have one last, but it's not like a very heavy talking point, and this is choosing the right SACCO. So in like very
about to Marisha.
Guys flagging Marisha,
because I wanted to ask him, because you are out of the three of us, you're the most recent one to have the interaction of choosing a SACCO. So you can you give us like your thought process around
recent experience? I asked, actually, to be honest, like we had a conversation with Collins before, even prior me getting to Marisha, and he knew how I was financially and which SACCOs are more lenient to joining, and considering that it's something that it's a place where I'm starting off from nothing, without knowledge and everything. He gave me an advice and even told me of people who he knows that are in the same circle. So you know those at the beginning, again, a lot of guys fail to join circles because they're afraid of these things might not work out. But when you're put in a room where you see people who you feel more comfortable. So I was more comfortable and joining a SACCO. SACCOs have been there for the longest time. Yeah, but right now is when I'm more open to. I have gotten the realization of being given the knowledge about the SACCO and how I can get my returns from it.
What made you choose Imarisha out of the other?
They have the membership. First of all, was very flexible. Yeah, it's very affordable, and the fact that so for me, you've said SACCOs are union based, and most of these unions are institutions like schools, teaching. Sorry.
Oh, yeah, they hold a common bond, like members are part of an institution.
Yes.
Teachers,
police.
Farmers.
Yes. So in the beginning, I have always thought that it's only those guys who are allowed to SACCO.
Me too, by the funny enough. I always thought police SACCOs for police.
Steamers of steamers.
Yeah, you need to work in KPLC.
Yes. You can be part of Safaricom SACCO.
Yeah, even Safaricom SACCO, and I didn't know there's. So when you gave me the option of when you went through them, and Imarisha looked so like it. Yeah.
Okay, to make it easier for him, let me tell you the points that I was arguing with, because I came with facts.
Yeah.
So one thing you need to consider, which is very important, is the financial health of a SACCO. Even before financial health, number one, is it regulated? Is it in SASRA? Because there's only, I think, 154 or 155 SACCOs under SASRA. So you need to make sure, number one, it's regulated. Number two, you have to look at the financial health. The only thing that kills SACCOs is instability, like Rosafi. That's the only thing. So if you look at the history of these SACCOs, is it constantly growing? Are they making money? If you look at their records, as in, do they look financially healthy? As in, ama easy books zinaka hii kitu niza crash any single time. Another thing you need to look at is their history. Like, do they have any scandals? Like ukiona, if you've seen your SACCO has a scandal,
red flag.
Bro, relax. That thing you need to consider, which is also important for me, was vicinity. How many branches do they have? If you get a SACCO but it has only one branch in a specific location, you see, like Stima SACCO,
it's inconvenient.
You can go to Tao, you can go to Ongara. Unajua, for Imarisha, it's in Upper Hill. It's in Upper Hill, it's in Nakuru, and it's in Kericho. Unajua, so like being able to find all of these accessibility options. Another thing to consider is rates. How much do they charge for transactions? Like, is it expensive to transact? For example, Imarisha has a very big advantage. When you put money in, it doesn't cut out your transaction charge. So if you have 5 SOC on M-Pesa, you can put 5 SOC. If you have 101, you can put 101. Say you need to put 96 or something. Another thing is looking at the interest you're getting. Because when you save with a SACCO, there's interest you're getting. If you save with, I think Safaricom gives 7%, if I'm not wrong, but Imarisha gives 10.5. Stima SACCO gives 10.5. There's other SACCOs that give around that figure. It's around between 9 to around 12 Vuko. Another thing you need to consider is maybe how easy is it to get your money back. By this I mean, SACCOs are required to give back if you exit today, they have up until 60 days to give back your money. If you go to Twitter or somewhere, you look for reviews on Maze, I've been trying to get my money out of this SACCO, it's not checking, Maze, red flag. And then also I think the biggest thing is just enda tu kwa SASRA list wangalia top 10 SACCOs, just cheza with those top 10, Maze. See, ukienda bottom 15 alafu ujipate Maze uko what was that SACCO that failed juzi? Is Metropolitan Rada?
That makes sense.
Yeah, so like, for example, like Steam I think is like the second, number 2, number 3 in terms of how much money they handle. Imarisha is number 8. You get, so if you're dealing with 15 billion as your asset base, the SACCO has 40 billion.
Know who to play with.
Know who to play with. I think that's the best thing. You just do. Actually, in short, in summary, this is actually a finance principle. Do your due diligence. Do your due diligence,
guys. That was our final discussion topic for this particular. We have talked about SACCOs. We've kind of explored them in a way that someone who doesn't know from scratch anaelewaje.
At least have an idea.
Exactly. Remember, guys, this is a series that we're doing for the next 5 or 6 episodes called Unlocking Financial Freedom, where we try to dive into the specifics of each of these different, I'd say, financial instruments that are available to us as young creative entrepreneurs. So, guys, before I give my parting shot, do you guys have anything that you'd like to tell our viewers? At least until we see them in the next episode, which is next month. Yeah, baby.
It's no longer 3 months.
It's no longer 3 months. We're back and we're better.
Get used to seeing us.
So,
Yeah.
let's start with you, Thomas, then.
Yeah, mine would be simply to advise you guys to take the opportunity to study more, do a bit more research about SACCOs, and also don't be fearful to take that approach and going to talk to the people there in the grounds. They will help you, they will advise you, and if you're not feeling it, then you can just walk out and, but do take the step. You never know where it'll get you to. Yeah, that's my one too. And thank you guys for listening. Thank you, our fans.
I think for me, I'll give a parting shot in relation to this specific topic. I think I don't know if everyone can tell I'm very enthusiastic about this topic, but I'll give a reason as to why. Some time back, when I realized the importance of SACCOs, it really helped me out. So due to the nature of what I do, sometimes I require financing. And when I entered into this world of business and this world of trying to make something out of yourself, I didn't really have any sources of credit per se. And when you don't have any sources of credit, you do what's closest to you. Mm-hmm. And in that case, it was mobile loans. And I ended up having very many loan products which I had taken. So you find like Mshwari, KCB M-Pesa, Timiza, and I'd even taken Absa credit card. And all of these things were using to now finance business. Of course, when money comes in, you pay back. However, I wasn't financially savvy enough or financially literate enough at the time to understand the cost of how much these things cost me. Then when I realized the importance of SACCOs and did my research well, I ended up saving in a SACCO how much it was exactly for all of those loans. And I took one big loan from the SACCO. It's called loan consolidation. It's a finance principle. So I took all of these, one big loan, consolidated these payments into just one loan, and then I cleared out all of the electronic debt. And it was like a fresh of breath. It's like going from paying 100,000 a month to paying 5,000 a month. You can imagine how much of a breather that is, because those loans are due in 30 days. But a SACCO spreads those payments over like 2 years, 3 years, depending on your SACCO, even 1 year. So it really, and that kind of gave me space and time to understand, okay, in this journey of building wealth, you can use credit to grow. Because you see, once you're done with like that first loan and you paid off everything, you could take another loan, put it in a different asset class. You're taking at 12%. Why not put it in a project that will give you 15%? That way you're getting a 3% margin. So it even got me thinking about all these finance ideas and how to move on. Ideally, in short, SACCOs gave me the access to credit that no other institution would have given me without having a job or collateral. Because salaried people actually have very good credit scores. But now, in the mobile loans, if you don't pay, they mess up your credit score.
That's another story.
Meaning that your credit score just gets worse and worse and worse. So even by the time you actually get access to credit. So as a business owner, since this topic is for business owners, I think having every dollar you put or every shilling you put in a SACCO is adding to your credit line, more or less. So if you put 100 rakh, you can borrow 100 rakh. You don't have to get guarantors. There's self-guarantee loans. So that access to credit, that access to financial inclusion, that access to being able to produce from something, it's a game changer. So for me, and also parting shot complete, now I'm done. A SACCO can be, in this case, it can be your best friend or your worst nightmare. So choose wisely.
So, I guess for me it's to say thanks to you guys. As always, amazing episode. Say thank you to the viewers. We're doing this with you and for you guys. Say thank you to the Your Mentor production team, who are, you don't see them, but they're doing their thing behind the scenes. Say thank you to the studio. The name of the studio is leaving my mind, but I want to say shout out to Clue. Thank you so much for helping us with this space. You can check out the space. It's at Lava Latte. It's literally the first space that you see when you enter Lava Latte. Have amazing amenities and such, and I'm guessing this will be home for us moving forward. And also, I guess we'll see you guys on the next one, where we'll discuss even more. Wait, thank you also to TDC. Be sure to check out TDC.
To Denim Collection.
www.tudenimcollection.com.